Hi, Sam. Hughes, and I'm coming to you from my home in Maine, and I felt it's very important to do this video today because we have had an amazing move already in this index. The index we're looking at is the Nasdaq, which has had a remarkable run. Here it is. It's a daily chart of the Nasdaq. There's the symbol right there. It's a daily candlestick chart of the Nasdaq, and here was the low set back in March, and look at this remarkable move we have had. While unemployment's gotten higher, things haven't necessarily gotten any better, but we've had a huge move on the upside. Now, the key thing is there's two things in life. There's reality, and then there's the market. And in the marketplace, you've got to be aware of actions and to see how far they can go. This has been truly an extraordinary move. But let's put on our trade triangles. This is going to take us out of the realm of reality and into what in fact goes on in the marketplace. It's very simple to do that. I'm going to put our first one in. It's going to be our monthly trade triangle. It's going to be right here, and that's at 1,665.63. You can see it here, and you can see it right here. That's still green. Now what that means is it means that the trend is still positive even after today's break, and there's the signal right there, and you can see how much the market went up after that. Now I'm going to scope this in a little bit further because I want to show you two things. I want to show you our weekly triangles, which you can see right now are red, and that just turned today, Monday the 17th of August. It just turned down. We got a -70 reading on this market, which means you're probably going to see more of a two-way street, and that's what you're going to be looking at in the very near term. But let's take everything off the screen and let's scope this in a little further. It's easy to do. You have one or two ways to do this. You can just go like this, keep hitting this button, or you can go right up to here to 1 month, boom, or you can see 2 months, or whatever works. So I'm going to put, let's just do 1 month because that'll get it really close. And I'm going to put our weekly triangles on. Here's our weekly triangles right today. There it is, 817 at 1946, and of course that's exactly what you're seeing here, 1946. So the market just turned negative. Now we had some clues earlier on, and that was with my video that I did on the S&P 500 over the weekend, on Friday as a matter of fact, saying that something was up. We were concerned that this was happening on a Friday. I think that was the first tip-off. And we looked at our indicator. This is the MACD indicator. Okay, so that was showing on Friday on the S&P 500 some weakness, but some weakness actually came in a little earlier than that on the Nasdaq. But this is the important data to remember. Monday, the weekly signal, the weekly triangle gave a signal not to go short, but just to get out, because the monthly is positive, the weekly is negative. So you should be out. If you're trading the Nasdaq or you're in the Nasdaq, you should not be long this market at the present time based on our trade triangle technology. So what's going to happen? Let's take everything off the screen again, and let's go scope this out a little bit further. And this is the most recent lows we've seen here, and I think that these are the most recent lows here, and this is the high that we've seen right here. So what I'm going to use is our Fibonacci tool, and this will help me measure how far this decline is going to go. Is it going to stop here? Is it going to go a little further, and so forth? Well, the Fibonacci tool is a remarkable tool, and we're very proud to have it in the suite of tools that we have at MarketClub. And I'm going to take this off the screen, all this writing. I'm going to go up to our Fibonacci tool, which is right here. And you simply click on the highest point, which I showed you, and drag it down to the lowest point. And what this does, it gives you a series of readings that are 23.68%, 38.2%, 50%, and 61.8%. Now these are all Fibonacci numbers. Now Fibonacci was an amazing, some would say genius, who was born in Italy, and in I think the 14th century. I mean, a long, long time ago. And he came up with this numerology, this sequence of numbers. Actually, he didn't discover himself. He actually took it from somebody else, but he's credited with publishing it in his book. We have a lot of this on the web, which you can read. But anyway, for some reason, the markets really like to look at these numbers. So we're looking at a 38.2% retracement, which is right around the 1906 level right here. And then a 50% would be the 1871 level. And finally, a 61.8% would be around 1837. Now, whether we get this far down remains to be seen. But certainly, with the weekly signal in place, we think there's a good chance you're going to see some more of a two-way market. And at least in the short term, the upside has been broken. And we'd expect to see this market come down and do some more repair work before it's going to go up. But the key thing is the weekly says be out of the market, and that's where we're going to be. So, hey, this is Adam Hewson. I hope you enjoyed this little lesson from Maine. That's right, Maine. But I think it's an important one. This is an important day in the Nasdaq, and I think we should all be aware of it. But hey, thanks for watching, and every success trading the markets. And thanks for using MarketClub.